Benchmark indices continue to extend losses. The Nifty trades near the 21,600 mark, while the Sensex trades near the 71,800 mark, down roughly about 450 points. Broader markets in tandem.
Prime Minister Narendra Modi inaugurates the new airport terminal building at Tiruchirappalli, lays foundation stone of several projects worth 20,000 crore in Tamil Nadu.
Ease My Trip approves raising up to 1,000 crore rupees via preferential issue.
And HUL's large pack strategy in its bid to drive volume growth is paying off, with its distributors indicating a 5 to 10% growth across segments in Q3.
Truck drivers strike against stringent hit-and-run penalties in the Bharatiya Nyaya Sanhita. Penalties include a fine of 7 lakh rupees and a 10-year jail term for hit-and-run cases. Supply chains are expected to have been affected.
Hello and welcome. You're watching Market IQ. Good afternoon. Thanks so much for tuning in to NDTV Profit. I'm Hersh Sayta. With me is Pallavi. And over the next half an hour or so, we'll quickly power you through what's happening in markets. Let's quickly look at the benchmark first. The Nifty 50 trading with a cut of around 0.5%. Second day of trade for the calendar year, and we're already seeing a bit of red. Let's look at the market breadth itself. It's looking extremely weak overall. Within the Nifty 50 basket, you have just 15 stocks which are in the green. All the others are trading, 35 stocks trading in the red. Even the advanced decline ratio seems to have improved now, but at one point of time was more than 2:1 in favor of the declines. Let's also look at the sectoral indices very quickly. The Nifty Bank trading down 0.75% or thereabouts, except for the Nifty Pharma. In fact, we are seeing a sea of red across the board. We're seeing 1.4% lower on the Nifty Auto Pack. Of course, auto sales numbers coming through at the start of this January month. Nifty FMCG also unable to hold on, down around 0.4%. The Nifty IT also down 1.4%. Of course, Nifty IT not helped at all by a slew of city notes across IT counters, suggesting either a hold or a sell. So largely what we're seeing, Pallavi, is markets are looking extremely weak, except the Nifty Pharma, which is up 2% in trade.
Thanks a lot for that. And like you mentioned, the Nifty Pharma up about 2%. Among those leading that pack, shares of Lupin are up by nearly 5%. That's after Nomura upgraded its price target for the pharma firm. Nomura has also increased its target for another pharma giant, Fortis Healthcare. My colleague Hemansh joins us with more. Hi Hemansh, what's happening? What does Nomura say on both of these?
Thanks, Pallavi. So Nomura has upgraded the target prices and maintained its buy rating on both of these counters, and the target prices imply a upside of nearly 20% on both of them. Let's take Lupin for one. The EBITDA margins, the margin expansion is expected to come in through over the next 3 to 4 years on account of new launches, cost control, as well as operating leverage coming in. Significant confidence expressed by the note on the US performance for this company. The US pipeline could help drive growth on the current base on account of the several approvals that have come in. Secondly, in terms of the Indian market particularly, you're seeing better growth in India on account of field force expansions, as well as the expansion noted in the chronic segment care as well. Lastly, they have raised their earnings per share estimates for the next 3 fiscals, for the current and the next 2 fiscals, by 8 to 14% on thereabouts. Then you have Nomura on Fortis Healthcare, where they're maintaining a buy with a target price of 475, lifted from the previous 388. And this is on account of increased average rent per occupied bed for the assumption that has been factored in over FY25 to FY30. Then you have brownfield capacity that is expected to also come in over the next 4 years, and adequate levers are also in place for margin expansion. Lastly, the valuation for the healthcare sector as a whole has improved, and Nomura cites that Fortis Healthcare in particular is currently trading cheaper compared to its comparables, hence the upgrades that have come in through today.
Right, thanks so much for that, Himansh. The Nifty Pharma, of course, doing fairly well in an otherwise weak day of trade today. And what we're seeing across the board is Nifty Pharma showing resilience, a bit of green across the board, except IPCA and NATCO, pretty much all constituents in the green. Thanks for summing that up for us, Himansh. And of course, domestic players, including Lupin, doing extraordinarily well today. But come January, we are also staring at auto sales data coming in for the month of December 2023, and it's a mixed bag. Passenger vehicle sales witnessed a slowdown on high inventory and lower demand, while two-wheeler sales figures saw double-digit rise. We have Vinay joining us to give us a roundup as well as a perspective on some of those auto sales numbers. Vinay.
Yeah, so as was expected, passenger vehicle sales slowed down in the December month because of the higher inventory and lower demand post-festive season. The problem is also the problem in entry-level vehicles where demand is slowing down considerably. But compared to that, two-wheeler sales saw a double-digit rise because the rural markets are recovering, analysts are saying, and this recovery is likely to continue after muted growth for several years. In the commercial vehicle pack, there was a mixed bag because right now we have seen that medium and heavy commercial vehicles are leading the sales. But for Ashok Leyland, that wasn't the case. There was a decline in sales exactly because of that segment for the company. In the tractor sales, we have seen that the fall has been more than estimated. And this is because of the delayed harvesting, and the next season of sowing is also delayed because of that. And analysts expect that this could continue for a few months and the sales could be soft for a few months in the coming financial year as well. So we talked as well with Maruti Suzuki's Shashank Srivastav and Bajaj Auto's Rakesh Sharma for their outlook on the auto industry.
Generally speaking, the auto industry growth is very closely related to the GDP growth, the per capita GDP growth. And there the projection so far is about 6.5% or thereabouts. And that's very positive because there is a very high correlation between the auto industry growth. In fact, correlation, statistically speaking, the R square factor is about 0.983, which is a pretty high correlation. So anything which negatively affects the overall economic growth would affect the auto industry growth as well. Of course, auto loan rates, if they were to go up, will also adversely affect because 80% of the retails in the industry happens through the auto loans. And therefore, any interest rate hikes there would be negative for the industry.
Exports is in line with the expectations as what we were thinking, because it's a very muted recovery, if I may call it that. It's like, quarter two was better than quarter one, and quarter three is marginally better than quarter two, and quarter four we are expecting to be slightly better than quarter three. The entire export recovery is dependent on the macroeconomic situation working out, the volatility in the currency, both in terms of availability and rates sort of smoothing out, particularly in Africa. And we are well positioned, but it all depends on how these economies sort of even out now. They've bottomed out, but now we have to see how they can sort of come back to normalcy.
Well, a bit of a tepid quarter for auto sales, but expected to look up from here on. Moving on with more stock-specific action. Several companies have come up with their business updates. We have Anushi here to help wrap that up for us. Hi, Anushi.
Hi. So I've come out with 4 business updates that you should be on the watch list today. So starting with the Coal India. Coal India has come out with its production and offtake data for the December one, wherein they have reported about 8.2% year-on-year growth in its production for the December month, while for the offtake it reported about 6.1% year-on-year growth. If you look at the 9-month FY24 figure, that was about 11% up for the production. Now this was mainly led by the eastern coast fields, and reacting to this, the stock is up today 3%. Now coming to JTL, some strong business update from here, with the company recording its highest ever quarterly sales volume at about 1 lakh million tons, which is 76% up on a year-on-year basis. Now this is from the healthy demand coming from its structural steel tubes and pipes, and also a strong capacity expansion plans with investment of about rupees 1,300 crores. So accordingly, the stock has shown positivity with being about 4% up today. Now coming on the flip side, we have the likes of Ultratech Cement and APL Apollo Tubes, which did not react that well with its business updates, wherein in Ultratech Cement we saw the consolidated sales volume at about 27.32 million tons, which is about 6% up on a year-on-year basis and about 2% up on a quarterly basis. But the stock, if you look at the stock, it is down by more than 2% today. And coming to APL Apollo Tubes, the Q3 sales volume came at about 6.03 lakh tons, which is about 11% down on a quarterly basis and about flat on a year-on-year basis. So with this tepid update, the company stock has been about 3% down in today's trading session.
Right. Thanks so much for that, Anushi. All of those stocks ought to be on your radar on the back of business update coming through for both Q3 as well as for December. But quickly moving on to the political front, we have PM Narendra Modi on his mission south. He inaugurated and laid foundation stones of various projects in Tamil Nadu. Accompanied by him was Chief Minister M.K. Stalin as well as the Governor of Tamil Nadu. PM Modi also addressed the 38th convocation ceremony of the Tiruchi University. Remember, the total value of Tamil Nadu projects are over 19,000 crores. These will be dedicated to the nation and include the solar power plant at Kavarati, which is the first ever battery-packed solar power project of Lakshadweep. But it's time to slip into a very short break. On the other side, we have a ground report from the Karnal bypass, Delhi, where truckers are protesting against the recently passed bill which introduces stringent penalties. We'll be right back. Stay tuned to NDTV Profit.
Hello and welcome back. You're watching Market IQ on NDTV Profit, and it's time for an NDTV Profit exclusive. The State Bank of India has directed its senior employees across circles to not organize business conclaves, seminars, or felicitation ceremonies till the end of this fiscal year. Now, to tell us a little bit more about the rationale behind that, we have Mimansa who joins in. Hi, Mimansa.
Hi, Pallavi. So, State Bank of India has suspended all business conclaves, felicitation ceremonies and seminars till the end of FY 23-24. This is according to an internal memo that was circulated by a bank. If at all a branch, a circle or a zone wants to conduct a felicitation event or seminar, it has to seek a prior approval from the top management. These changes have come into effect immediately and applied to the third parties associated with SBI as well. Now, NDTV Profit had earlier reported that some SBI employees are being rewarded with silver coins, freebies, and even one-day excursions to outstation locations for meeting or exceeding the target for for the sale of third-party products. However, people with knowledge of the matter told NDTV Profit that this is not linked to curbing mis-selling of third-party products. It is rather to reduce distractions for employees before the financial year ends. So the bank's senior management wants a greater focus on core business operations while continuing the third-party product sales. In fact, the memo also stated that any sort of recognition would depend on the performance of core business parameters.
Right, thanks so much for that, Mimansa, for bringing us that quick update. But the FMCG sector is dealing with slow growth, of course, and HUL's large pack strategy appears to be paying off. Distributors' commentary to NDTV Profit indicate a 5 to 10% growth across segments in Q3. Our colleague Cesar Sen is joining in with more on this one. Cesar, take it away.
Right. For brands, larger packs result in instant volumes as they increase the number of units purchased in one visit. These packs are generally for family consumption as it gives consumers the benefit of paying less per gram. Now, for HUL, this strategy is not new as it has been pushing for larger packs across its modern retail trade for quite some time now. However, the strategy is paying off, the company has launched this larger packs in general trade in a bid to drive volume-led growth. Now, HUL distributors say that the company has supported this larger packs with almost similar promotions as they offer in modern trade. Aided by the launch of modern trade range in general trade, distributors have indicated a 5 to 10% growth across segments in Q3 against lower growth in earlier quarters. The move is not just helping them garner more value-conscious shoppers, but it is also seen as a strategy to keep off competition as buyers aren't procrastinating trials with other brands in the current inflationary setting. However, that said, the overall volume growth is likely to remain weak in the Q3 as rural demand remains elusive. Now, unless rural recovers, the entire FMCG sector, including HUL and others, they are unlikely to see a material uptick in the volume growth.
Well, the broader takeaway is that, rural demand remains a little bit weak. And I think, Hersh, one of the most interesting things to watch out for in the coming days will be what the government's going to be doing about that. But moving on, Motilal Oswal has reiterated its buy rating on Lemon Tree Hotels. The brokerage firm maintains its bullish stance on the back of improving presence in the luxury segment and room renovations to aid ARR growth. Mahima joins us with more on that.
Right, Pallavi. So as you rightly mentioned, they've reiterated their buy rating with a target price of rupees 150. They're improving their presence in the luxury segment, and they're also increasing their inventory through management contracts. Now, as you rightly said, companies set to benefit from this significantly from the sectoral tailwinds as well, and it will emerge as a stronger player because of this. And this will also add on to the room revenue as a whole, like the average room per revenue. And the company is expected to benefit from key markets such as NCR and Mumbai, because we have recently seen mega convention centers that have been built in both NCR and Mumbai. We saw Bharat Mandapam and Yashobhumi in NCR and the Geo Convention Center in Mumbai. Because of this, the footfalls for these hotel chains will increase and it will benefit Lemon Tree as a whole. MOSL has also said that the recent project of Aurika Sky City Mumbai near to the international airport of Mumbai is a premium segment hotel, and it is set to contribute 21% of revenue and 23% of EBITDA by FY26. Also, a very strong pipeline of 3,354 rooms is also to be operational by FY27 as per the guidance provided by the hotels. Motilal Oswal has also listed down significant risk that includes decline in MICE activity, downturn in tourism, and lower than expected traction in Mumbai. But overall, they've maintained that while demand is in rise for these hotel chains in cities like NCR and Mumbai, and the supply is expected at a much lower rate, it will definitely benefit hotel chains like Lemon Tree's.
Right, Lemon Tree in focus, up 10.5% on the back of that. Thanks so much for that, Mahima. We'll, of course, keep you updated, and we'll have to wait and watch as to where that stock closes. Very interesting note coming in from Motilal Oswal. But very quickly moving on, truck drivers are protesting against the recently passed Bharatiya Nyaya Sanhita, which introduces stringent penalties, including a fine of 7 lakh rupees and a 10-year jail term for hit-and-run cases. The 3-day strike may have adverse effects on the supply chain of vegetables, petrol, diesel, textiles, and other items. Our colleague Charu Singh joins us from the Karnal bypass, ground zero. Charu, talk to us about what the quantum of disruptions look like to you.
Hi, so as per the newly passed criminal law, specifically the Bharatiya Nyaya Sanhita, 10 years of imprisonment and 7 lakhs in penalty have been provided for hit-and-run cases. Now, earlier, the same offence was punishable by a maximum imprisonment of only 2 years, and this has sparked a controversy among the truck drivers in several states, including Madhya Pradesh, Uttar Pradesh, Punjab, Maharashtra, etc. Now, we also have to consider the fact that over 1,68,000 people every year in our country die in hit-and-run cases, and out of these 18.1% are truck accidents. So over 30,000 people lose their life to truck accidents. It is also to be noted that, which is very evident, that if there is going to be a truck drivers strike, that supply chain is going to get disrupted for textiles, food, vegetable, diesel, petrol. Right now we are in Sanjay Gandhi transport stand, and even while coming here we could see kilometers of jams, and we could see how it could get impacted, because nearby there are areas where supply of vegetable and fruits are basically dealt with. It is also to be noted that school bus drivers are also in the industry, and they have also joined in the strike in states like Maharashtra, and their stance is that if such stringent methods are going to be in place, new people are not going to be keen on joining the industry, and also it is to be noted that this could lead to the harassment of truck drivers as per what they are saying. So that's all for now. For more information, please log into www.ndtvprofit.com.
Right, thanks so much for all of those updates, Charu. We'll of course stay tuned and we'll keep you updated on what's happening on that count. But let's quickly have a look at where markets are at. Really going nowhere. We are where we started the 1 p.m. show at. We're looking at largely a 0.5% cut on the Nifty 50. Let's quickly look at the Nifty 50 constituents as well, if we can. Within the contributories, we're seeing a bit of green with regard to where pharma is concerned. Sun Pharma, Bajaj Finance contributing positively, while the likes of an ICICI Bank and L&T being the laggards in trade today. L&T 21 points. Don't remember the last time I saw that kind of a number coming in from L&T. Negative contribution to the Nifty 50. The likes of a Kotak also contributing 11. Let's also quickly, if we can, look at the Nifty Pharma. We spoke about that and the constituents there. If we can pull that up for you, the Nifty Pharma trading 2.5% higher now, 400 plus points on the Nifty Pharma in trade today alone, and within the pharma basket, we're only seeing Natco Pharma, which is down around 0.75%. Other than that, Lupin up and away, 6.5% on the back of that note from Nomura. But with that, we're completely out of time on this edition of Market IQ. From Pallavi, myself, and everyone who puts the show together, thanks so much for watching.